these three stocks got us pretty excited.
We even bought one of them.
As usual, guys, none of what we say is financial advice. Everything we say is purely educational. Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. So Jonathan, now, as usual, we are always very interested in figuring out how the management is performing.
Yes.
Through the financials and through some of the news and stuff like that. The three companies that we will be reviewing will be Top Glove, Kane Hing, and CFM. So Top Glove, everybody's favorite company, or not so favorite right now, is the number one glove manufacturer in Malaysia by size.
Yes.
And well, I think a lot of our viewers already know this stock's performance. It's down 70%. Yeah, very painful.
Yeah, and what's more, it's like down 30% after like 1 month.
Yeah, so when you think after it dropped 50%, you're like, how low can it go? Yeah, well, another 50%. Why not?
Deep gets deeper again.
Yeah, deep. Yeah, so yeah, we can see the financials right here. You know, as you can see, the trend is only one way.
Yes. So what's even worse is that the latest report, they report in their quarterly earnings, it's actually making even, I think, 3x the losses as compared to the previous quarter. So they're actually in quite a bad shape at the moment. And I just did a quick analysis on their latest quarterlies.
Right.
So their revenue is down 61%, but the bottom line is down 178%. That's even worse.
Cool. This means to me that the cost has not gone down faster than the revenue. Right?
Exactly. Now, if you look at that cash, right, you notice that their cash also did drop quite a bit. So in total, it drops about 29%. And they actually added this one line called the debt securities, investment securities, debt securities. So I'm actually quite confused what is this, but I assume that this is the perpetual sukuk. But why did they put in asset when it's actually a liability? That's just on my personal opinion.
Right.
Yeah. So yeah, it's pretty interesting term to see in the asset segment.
Right.
And okay, so this is their cash flow, and you see the title I put there as solvency risk. Why? It's because if they don't generate positive operating cash flow, means there is not much money actually pumping into the business.
Right.
So as you can see, the net operating cash flow is rising 592%, but it's rising at a negative.
I think it is very important, guys. I know we are a bit misleading right now, but plus 592% is not a good thing.
Yes.
Okay, it just means that the loss is expanding.
Yep.
Okay.
So at the moment, it's not a really good sign.
Right. So yeah, why? But why, if things are looking so bad, that we are interested in Top Glove?
Right. Okay. So number one thing is that this financial year 2023 could be the first ever year that Top Glove may report a negative operating cash flow. So in the history of their reporting, they didn't announce any negative operating cash. So this will be quite interesting. We will see whether in the next few quarters will they manage to turn around, or will it still stay on the red? So that is something that we may want to take note of. Second thing is that the management actually has been pretty confident. They say that the decline in average selling prices has been slowing down. So it could be a positive sign, but you never know whether will it slow down or maybe it even the decline goes, the deeper get even more deeper. We never know about that. And the third point that we know is that the utilization rate is right now below 50%. So it's not really a good sign, which means there's lesser demand for glove. And the last point we have here is whether this share price, 71 cents per share, is it actually priced in? Well, if you look at all of these analysts' target price, right? I wouldn't encourage you to actually just look at target price. Look at what are their analysis on that particular company. So this is what they gave. The target price, I think on average, they gave about 50 cents, 55 cents each. So which means there's still another 15 to 20% downward from the current share price.
According to analysts,
According to analysts. But personally, I'm still quite bearish on this company.
Okay.
Yeah, I mean, there's still too much of uncertainty.
Yeah.
I don't know whether the average selling price will even slow down. Maybe it
Right.
doesn't.
But of course, why we say it's exciting is because I think one big thing is the pricing in.
Yes.
Right. I think the hatred for the stock is very high. And as an investor, you're not out there trying to be necessarily a contrarian outright, but certainly you have to be aware of what we call the big narrative, because the narrative and the fundamentals sometimes is the same, sometimes it's not the same. And usually it's not the same when the narrative is on an extreme. And certainly for me, at least, Top Glove is, or gloves in general, the narrative is starting to reach an extreme where it's pretty much no one really thinks they're going to come back, and China is too powerful. Look at the utilization rate and things like that. But just so you know, a lot of the companies that bought gloves are clearing their inventories as we go. And once these inventories start to clear, you will see utilization rate in Top Glove and of course across the industry start to improve. So that is something, that's the thing about investing, is that what people used to hate can become love. What people used to love can become hate. I mean, Tesla is a good example. 2017, 2018, it was in the doldrums. It wasn't doing well. There's stories of that, Elon Musk suffering and all that. Obviously, 2-3 years later, it went up a lot.
Yep.
But then today, it's a stock that people lost a lot of money on.
Yeah.
Right? Now I don't say people hate Tesla, but
yeah, it's a misfeeling.
right now it's really mixed and 50-50, right? So stock market is a very emotional place, guys. Try to always not let the first emotion you get to be the correct one. It could be, but try to do that.
Yep. And the next one, we're going to be talking about Ken Hing.
Yeah. But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description. Next, we have Kane Hing. I'm not quite sure how to pronounce, but he has done really well, actually.
Yes.
And we are on our FIRL Pro program. We will be coming out on a report on Kane Hing. Coming soon, actually, very, very soon. So now, as a disclaimer, we are former shareholders. We used to hold it. We bought it actually just a month ago, less than a month ago, at $1.19, and we actually sold it for $1.78.
Yes, correct. So for context, this is my trading account. And I actually did mention this to the FIRL Pro group community in our Telegram. So if you actually join our FIRL Pro program, you actually be inside this Telegram group. And I was actually pretty lucky during that time. I bought it, I think was November. Yeah, late November. I was still doing research, but I just parked a little bit of money. So I didn't really go big or whatsoever. And fortunately or unfortunately, 2 weeks time, it just went up like 49%. Then I was thinking that, okay, the pump I think it's a little bit ridiculous at a short amount of time, 2 weeks. So I just sold it lah. Yep.
Okay. Yes. So roughly, they're into metal sheet fabrication, right?
Yes, metal forming kind of business. So they do all those precision engineering where they make those tool die for your all those home appliances, E&E industries and whatnot.
Okay.
Very general business.
It's very boring business. But here we can see just in 2 quarters alone for FY 2023, it is already due to do better than FY 22, right?
Yes, 2 quarters already is the same amount as their last year's financial year and profit. So that's pretty impressive. Now, if you look at their latest quarterlies, so you can see that their revenue is up 50%. Profit is up 281%. So this tells you that they have economies of scale. They have better operation efficiency. It's very good. Now, cash flow wise also has been really very healthy. It's up 222%.
So the collection is real. It's not.
Yes. When I was researching this company's operating cash flow has been on a positive, I believe, for 17 years. It's very, very impressive.
Very rare.
Yeah, very, very rare. And it's at a 100 million market cap.
Yeah, back then.
Back then, yeah. So it's pretty surreal. Okay, so this is their segment breakdown. Basically, they only have two major segments. So one is manufacturing, the other one is trading business. So obviously, manufacturing is the one they do those tool and die or those metal forming and fabrication kind of business. So if you notice, the revenue is actually up. I believe it's like 50%. Yep. So it's pretty impressive. Trading also business is also up by 60 to 80%. Now, if you look at their geographical breakdown, you see that Malaysia one is actually going down. So it's like minus 0.4%. But if you look at their Vietnam operation, it's up 79%.
And that is probably the biggest contributor lah.
Yes, correct. So my take is that maybe Vietnam's economy right now is actually doing very well.
I see.
I mean, there's a lot of demand. I mean, you can see that their revenue is growing. So which means maybe Vietnam side is it looks positive at the moment.
Yeah, and it's a diversification away from the ringgit denominated revenue.
Yes, correct. So this is the final takeaway. When I was analyzing this, my first thought when I see Vietnam's operation, I was thinking that, okay, Vietnam is booming right now at the moment. And the second thing is that they have economies of scale. Reason why is also because they have this method called the precision cold forging. So what is this? Is basically
sounds very cool actually.
Yes. It is another method for you to make your product from the input, from the raw material into the final product. So there's this process called the precision cold forging, or you can do like the heating or warming kind of method. But this cold method, right, actually saves a lot of costs. And I think they invest quite heavily on this one, which means they managed to reduce a lot of costs in their operations and hence the economies of scale.
Right.
Yeah. And the third point we have here, it is trading less than 6 times EV to operating cash flow for 17 years. 17 freaking years. So that actually got my eye.
So, oh, wow. Okay.
Not 1 year, not 2 years,
the
but
highest
17
year
years.
is, okay.
Yes. So that is actually pretty insane that nobody actually pay attention to this company. So lucky for me. And the last bit we have here is whether is this still a buy now? I mean, now it's pumped like 40, 50% up. Can you still buy it? That's why you need to check it out in FIRL Pro. We'll be talking every single thing, every single detail, whether are we still bullish in this company.
Yeah, this reminds me of a quote, right? There are decades where nothing happened, and then there are, seconds or days or weeks where decades happen.
Yes.
So we'll be, let's go on to the next segment. All right, guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback as long as they're constructive. All right, the last company that we are looking at is CFM, or Computer Forms Malaysia. Crazy price.
Yes, crazy up. I believe they up like 2 times in a matter of one month. Yeah.
Oh,
1 month. Okay, let's find out about their financials.
Yes. So, whoa.
Okay. This is a pretty interesting one. You can see that their quarterlies, latest quarterlies, all 4 quarters, they are actually making on the loss. And then if you look at their annual kind of reporting, you can see that there's a financial year 2022, there's a huge uptrend in terms of profit. I assume that they dispose something. Yeah, most likely some one of the asset. But if you look at their latest reporting, they're actually in a loss making. Now, if you look at their top to bottom line, revenue doesn't seem like it's growing, but the other income side is growing massively, about 15 times in 1 quarter. So, yep, something's happening over there lah. And okay, so it is actually explained in their balance sheet. So they actually sold their PPE, property, plant and equipment. That's why you see there's like a 92% drop. And there's about 680% increase in terms of their cash. So they liquidated their asset and then they converted it into cash.
Okay.
Yeah. So you look at cash flow. I mean, revenue, operationally, they are not really doing any making any money. So obviously their OCF also is loss making.
So it's mostly really just a once-off thing, as you rightly suggested.
Yep. So if you don't know what they are doing, so this is their business. They are in the printing industry. So they do these business forms and data prints services. They do commercial printing, packaging, and all these whatnot kind of business. So if you can look at their revenue, it's actually not really increasing like a lot. I mean, it has been very so-so only. So yeah, it's just a one-off profit gain from that PPE disposal.
So yes, the takeaway.
Yeah, so this is a takeaway. The management actually stated that they sold 4 parcels of land. So they sold it. In total, they profitable about 91.1 million, and they distributed a special dividend. So half of it, about 41 million, it goes to the dividend, but the other half, we don't know what are they going to spend on. It is still keeping in their balance sheet, in their bank, so they haven't really announced any plans about it. And then another fun fact is that the Datuk Sri Dr. Pang Chao Huat actually owns 65% of it. And this doctor, he's actually managing director for Sanichi Technology Berhad. So if you don't know what Sanichi Technology Berhad, I suggest you to go look at their price chart. It's pretty interesting. A lot of like up and down, up and down, up and down. Yeah. And also, another cool fact is that Dr. Pang actually wanted to take over this company at 60 cents when it was in May 2022. So if you imagine, right, they were actually trading at this kind of share price point, 60 cents, and now it's around 2 ringgit and 70 cents.
Yeah.
So it's like a 5x.
Dr. Pang must be a bit...
Yeah. So this is an interesting company.
Yeah.
I think that's about it.
Yeah, guys.
3 companies.
Just before I go, just let you know, we have this research program, right, where you can read our reports on some of the ideas that we like to post to our exclusive internal members. Some of the performances here you can see just from the period of roughly August to November.
Yep.
A lot of stocks have done really well in a period where stocks are suffering.
Yes.
Right. Stocks are down 5-10%, whatever.
Yes, correct. We're gonna be updating the December one very quickly. Very soon. Probably I think next week or next week or so.
It's a holiday present for you guys.
Yes, correct. So you will see how our portfolio actually perform.
Yes.
In December. And yeah, I think that's about it. If you want the free stuff, the free sample of our FIRL Pro report, you can check it. The links are all in the description and in the comments. Yeah.
All right, guys. Thanks for staying all the way, right? And looking forward to seeing you in the program, or if not, in the next video.